Ladies and gentlemen, February 3rd, 2022. I'm Matt Bilinsky. This is The Prevailing Narrative. And before we get into some topics, I want to tee up an interview that I'm having on this episode is with Tobias Heaslip. He is the CEO and founder of Trading TV, a super hot startup that is kind of the love child of CNBC, Twitch, and Robinhood. So it's like live streaming for trading securities, stocks, crypto, what have you. You can conduct the trades on the platform, but also, for creators, because now we have an entire universe of creators who are talking just about stocks and trading and financial news, and that speaks to the economic environment that we are in. And it's changing very rapidly with a rise in interest rates and a new macroeconomic environment being kind of mandated by the Fed, and a big dump off in crypto and tech stocks recently. So between that and inflation concerns, a lot of people's minds are on the market right now. And Tobias is a guy who has worked at Goldman Sachs, Morgan Stanley, some of the top boutique investment banks in the world, where he has been a trader, particularly focusing on tech and media stocks. And so he's seen every piece of the chessboard. He's seen the financial markets from just so many different angles, and he's going to tell us, what his thoughts are on the macroeconomic environment and what we're seeing in the economy. Super interesting. We're going to switch up format a little bit also this week, because it's not going to be my only interview. This Friday, I will also be releasing another podcast that is a long-form interview on crime in America's big cities, in particular Los Angeles, with Deputy District Attorney John McKinney. He's one of the deputy district attorneys here in Los Angeles, has been for 23 years, and has been a vocal critic of his boss, Los Angeles District Attorney George Gascon. And he's going to give us just a masterclass in understanding why crime seems to be surging in Los Angeles and America's big cities, and in particular in direct response to some of these new reformist, decarcerationist district attorneys like George Gascon, who have been elected in LA, San Francisco, New York, Philadelphia, and some other cities. We'll also be joined by my good friend and colleague Sean Matian, who's been a criminal attorney and and defense attorney here in Los Angeles. So we're going to get the prosecutor's view and the defense attorney's view, and we're just going to do a deep dive on crime and criminal justice in Los Angeles. I'm going to have two pieces of content for you this week. But first off, like I said, today's episode, we'll get to some topics in a minute, and then to the interview with Tobias. This is The Prevailing Narrative, as always, your weekly dose of sanity. And we will need some sanity after these recent NFL playoffs. They were incredible, dramatic endings, game-winning field goals. Lots of games went to overtime. Just an incredible set of games, including the Los Angeles Rams versus the San Francisco 49ers game, which took place at SoFi Stadium here in Los Angeles this Sunday. Beyond the antics on the field, there were some interesting ones in the stands, and in more particularly the luxury boxes. So after the game, LA legend Magic Johnson goes to Instagram, as he often does, to do a photo dump of his photos from the game. And the caption reads, "In the suite at the NFC Championship game with California Governor Gavin Newsom, LA Mayor Eric Garcetti, San Francisco Mayor London Breed, and billionaires Alec Goris and my partner Mark Walter." Billionaire Alec Goris, fascinating. Either way, that photo dump is notable because it displays London Breed, Eric Garcetti, and Gavin Newsom not wearing masks. They're supposed to be wearing masks. SoFi Stadium was under a mask regulation, as are all indoor facilities in the state of California, by the rules laid down by Gavin Newsom himself. So while it's obviously patently absurd to expect people to wear a mask in an raucous, rowdy 80,000 person NFL stadium during a playoff game, I mean, they dispense with any rationality and try to make us continue with this charade by issuing this mask rule, and then don't even follow it. Of course, Newsom the next day lied his ass off and said that, he only took the mask off at Magic Johnson's request in order to take a photo, and also in order to eat and drink, even though, there's numerous photos of him not wearing a mask at various junctures of the game. But lying is kind of a state of being for this individual. It's not really something unexpected. Garcetti, just to take this guy, he's pretty much abandoned the post of mayor. I mean, the only time he shows up is to go to sporting events. Ask anyone in LA, including people in the mayor's office. He's abandoned the job of mayor. Okay. Essentially, during COVID, he couldn't take the heat anymore. He was expecting to get a high-ranking position in the Biden administration. Biden wanted nothing to do with him and shuffled him off so he could be ambassador to India, for fuck's sake. And he's really hasn't done, he doesn't show up to work. And I know this because I know a lot of people involved with Garcetti's office and those who raised a lot of money for him, because I was one of those people back during his initial mayoral campaign in 2013. Listen, I was young and naive. He had a good stint as a city council person. He was very pro-business and pro-development. And hey, if you're an up-and-coming young professional in LA, it made sense to go raise money for Eric Garcetti, who is likely to become the next mayor, as a good, for professional advancement and networking. I mean, I got to experience this guy when I was fundraising for him, at some of these events. And I mean, he's a total phony. He would just, go put on his sly fake smile and talk down to everybody, and then turn around to me and then make any number of crass statements about women and God knows what. And just, this guy's a total phony. Anyways, back to this game. You have the political leaders of California and its two biggest cities who are telling everybody and requiring all businesses and indoor facilities in their territories to mask up. And once again, they're not doing it at the game. Most egregiously, what really lit the fire on social media and the response to this afterwards is the fact that, Sunday, Eric Garcetti and London Breed and Gavin Newsom don't have to wear a mask at SoFi Stadium with 80,000 people. But Monday morning, when all the children in their cities in the state of California wake up and go to school, they have to wear a mask all day long. That's on its face just grotesque. And the friends of mine, the followers of mine who are parents whose kids have to go through this were absolutely livid. And rightfully so. Was there any response acknowledging this from any of these people? No. Of course, Newsom just brushed this off and suggested that he was wearing the mask the entire time. But beyond that, this is an 80,000 person stadium. Nobody was wearing masks. We all know they weren't. Okay, everyone can see it right in front of their eyes. Yet we're supposed to continue with this charade and with this meaningless pageantry, and businesses have to abide by this despite it continuing to corrode their relationship with their customers. And while the people making the rules do not feel compelled to follow it themselves, this can only last for so long. Right? A society can only last with the elites and those making the rules essentially saying, hey, screw you peasants, we don't rules for thee, but not for me, for so long. At some point, it bubbles over. And so I'll get to where I think that's going in just a second. But, we all know at this point, in the vast majority of situations, because as we know, as we've discussed, masks can have a beneficial effect in certain limited circumstances, but are not universally useful, including duration, right? Over the course of 2 to 3 hours sitting in a stadium, the amount of airflow and particles that leave everybody's mouth, regardless of which mask you're wearing, unless everybody's wearing an N95 the entire time, it's not going to stop COVID, okay? If you stick people in the same space for 2 to 3 hours, eventually the air is going to escape, okay? You can go look at the CDC's guidance on various masks other than N95, and this is what it says. So we all know it's bullshit, right? We all know these masks are hollow symbols, and all they're meant to do really is to signal if I'm wearing a mask or I'm instructing or suggesting that you wear a mask, this is me giving a symbolic gesture and an indication that I am a thoughtful, educated, sophisticated person who believes in science and cares about others. And this is the symbol of that, even though we know that the actual health impact at this point is next to meaningless. And so once that is another one of these factors that funnels into the grotesque hypocrisy of the political class defying their own rules, because they know that they're making everyone observe these rules just based on that symbolism. Okay, they have the data, they have the understanding, they know that these things, given the circumstances, in 9 out of 10 situations, do not have any discernible health impact whatsoever. But, hey, once again, they're telling us, let them eat cake, and they're telling us that we have to abide by the rules, in particular a bunch of children, while they do not. And so what does this portend for the states that, state like California, that's a blue state, heavily Democratic? And is this something that is sustainable? And I think that a lot of people get lost in the false dichotomy between liberal and conservative, red state versus blue state, and they don't understand that there are cleavages within these communities, right? California, yeah, very blue, but not everyone's on board with this bullshit, okay? I know because I see my direct messages, and it's a lot of people from the state of California and from Los Angeles, including the vast majority Democrats, who aren't on board, right? And I have a bit of a social media following. It's nothing, it's nothing outrageous. I have about 36,000 followers on Instagram. That's gone up by about 31,000 since the beginning of the pandemic. And so that's a lot of people that are very engaged on news about COVID, right? They're always interested in the facts and the data and the relevant issues to this topic. So I get a ton of direct messages of people giving their honest thoughts and feelings about masks, vaccines, about COVID, about risk, about what's being done to their children. And the amount of messages I get that are caveated with, I don't feel comfortable saying this publicly, or I'd never say this publicly. It's unbelievable. If you had any idea the pure volume of messages I get of people saying completely rational and in fact probably more accurate things, but who don't feel comfortable saying it publicly. Certainly in California, amongst the class and the cohort of parents. I mean, this is because the handful of Karenish parents who just lambast anyone who doesn't want to abide by a restriction, or who might suggest that certain restrictions don't have a rational basis, and they're the ones who control the conversation. But in response to this episode with Newsom, Breed, and Garcetti, this has really empowered a lot of people who didn't feel comfortable speaking out to now speak out. Essentially, a lot of people going to their parent groups, their children's schools, the administration, or even youth sports, much of which require that kids mask outdoors during athletic activities, which is just insane, saying, hey, oh wait, the people making these rules don't feel the need to abide by them. Why are you forcing my kid, my 6-year-old, to play a soccer game with a mask, wearing a mask, when the politicians who are making the rules don't even feel the need to do so? And I think that this was a bit of a turning point in that regard. Whether or not Newsom finally caves and accepts that this is all bullshit, I mean, the momentum and the Overton window of what people feel comfortable saying around the mask conversation, particularly in regards to children, I think has changed in response to this event. And this actually followed an interesting piece that kind of discusses the split, or this, let's call it this cleavage in blue state society about the mask issue, by Ross Douthat, who's one of my favorite columnists. He very much harps on a theme of American decadence, that we've become kind of a stale and bland society that's no longer dynamic, that even at some other times when things might have been more volatile, we were a more dynamic society. And we've just kind of sunken into this ennui, and we no longer have true spirit. So his piece was called, Will a Mask Debate Split Blue States? And he mentions how even within blue states, you can literally travel neighborhood to neighborhood and experience different realities. As he says, if you're a New York City resident, you can experience two completely different realities just by traveling the short distance from the posher parts of Brooklyn to Queens. If you pretty much in going from Brooklyn to Queens, you go from a world of ubiquitous N95s and careful checking of vaccine cards to a world where masking is maybe 50% proposition, and outside of hipster establishments, the vaccine pass rules are almost totally unenforced. You also see that in Los Angeles. I'd say at most 25% of businesses here are checking vaccine cards. We have what's supposed to be a universal vaccine mandate for indoor businesses. Nobody's enforcing it, right? And once again, we're supposed to continue with this charade and pretend that these are sensible rules that people are following, and that's just not the case. But the point of Douthat's piece is that things are starting to get hot under the collar within blue states. You kind of saw it with Virginia flipping back to a Republican governor. And if you poll everyone, I mean, essentially the cohort that flipped Virginia from voting for Joe Biden by 10 points over Donald Trump to electing a Republican governor literally literally a year later, is the handling of COVID restrictions amongst children. Is closing schools, trying to force vaccine mandates and mask mandates on the youth. And as we all know, the youth are at incredibly low risk from COVID. And this is one of the strangest phenomenon, that it seems like the power structure in liberal cities and liberal states is trying to exert its power over the most powerless and two least at risk cohort, right? as Douthit goes on and kind of explaining these two different universes that are essentially right next to each other. And to pass back and forth between these two worlds, just a subway ride or short highway drive away from each other, is to appreciate not the ever-expanding influence of Fauci and technocracy, but now at least the palpable limits of its power. Where do we find the limits of power to enforce COVID restrictions, right? At what point do they become too much that people start disobeying? Then he goes on, with one crucial acceptance, of course, public school systems where statewide school mask mandates in states like New York and Connecticut have kept kids masked in communities where otherwise the public health regime has little purchase, right? So all these cafes and restaurants in LA are flaunting the vaccine mandates. They're not checking the fucking cards, okay? They're just not. Then you go to schools. You can't hide in schools. They're checking vaccine cards amongst the youth. They're enforcing the mask mandates amongst the youth, which is the strangest because, as Douthit mentions, kids are one of the lowest risk populations, and that means that this extension of power only heightens the peculiarity of the entire dynamic. It's like the restrictions are being most forcefully applied against the most powerless and the most at-risk cohort of the population, which is just incredibly strange. So where does this all end, right? I mean, our parents, and because once again, as I mentioned, all these people that follow me and our young parents that have kids that are DMing me about, their frustration and aggravation with COVID restrictions for their kids. Sorry to break it to you. These are not Trump voters. These are not Republicans. A ton of these people are Democrats. And at some point, this breaks, right? At some point, there will be a straw that breaks the camel's back. And these politicians are not going to be able to, or forget the politicians, the other citizens that try to enforce this stuff are not going to be able to enforce that kind of biomedical security state to the same degree that they think they can right now. Like, for instance, California is still under a state of emergency. In 2 weeks, there's going to be hundreds of thousands of people coming to LA and 100,000 people in that stadium for a Super Bowl. How, like, the utter absurdity of all of America watching the Super Bowl going on in Los Angeles, and Los Angeles still technically being under a state of emergency. This is going to get nasty, as it deservedly so should get nasty. I mean, what the political fallout will be for people like Newsom and, Garcetti's already done. He knows his political career, for all intents and purposes, is pretty much over. That's why he's been hiding in a cave essentially for the last year, only to come out to go to sporting events. Another place where we need to kind of look past the red versus blue divide and understand there's starting to become some breakages within these cohorts. And you can believe me or not believe me. You can deny that this is what my DMs look like, that it's a lot of Democrats who are really no longer on board with these COVID restrictions, but that's just the truth. And you're going to start seeing that materialize one way or the other. All right, let's stay on the topic of football here for a second, and also on the topic of enemies. People like Eric Garcetti and Gavin Newsom, they are, of course, my enemies. I'm making no bones about that. But there's another enemy of mine who I actually learned quite a bit from and reached a healthy level of respect for, and that is Tom Brady. Tom Brady announced his retirement this week. I was looking up some quotes about, respecting an opponent or a worthy opponent. Warriors want a worthy opponent. There is no redress in fighting the pathetic. And maybe that's what pisses me off so much about guys like the Newsoms of the world and these other just ridiculously incompetent politicians. I mean, these are pathetic enemies. But one who is not is Tom Brady, very much a worthwhile and an admirable competitor. Man, I used to despise this guy, right? And first off, as an Angelino, everything about Boston sports, and as a New England Patriot, he represented Boston sports, I just despised. We have a natural rivalry. It started between the Lakers and the Celtics decades ago, really heated up when I was a kid in the 80s between the Lakers and the Celtics. And it's such contrasting cultures between Los Angeles and Boston, and these Boston sports fans were just these really kind of lowbrow, bottom drawer, aggressive, wannabe tough guy, obnoxious people. It was like, go freaking find something else to do, to value in your life other than Boston sports and having a crappy accent. And then Tom Brady comes along and is the vessel for their success. And he seemed like the most cliched, mindless dude who just was, his favorite movies were every cliched sports was, oh my God, America, Varsity Blues and The Program are the greatest movies of all time. Like, Tom, this guy is so annoying. And then you go to the beginnings of his success in his career when he led the Patriots to their first Super Bowl with the Tuck rule, beating the Raiders. We all know the Tuck rule was bullshit. And everything about Tom Brady, I just despised. And I rooted tooth and nail against him for years. Could not tell you how thrilled I was when New York Giants upset his great New England Patriot teams a couple times. But you want to know something? Eventually, I bit the bullet. Eventually, this guy's greatness was just impossible to deny. The guy's, what a track record. I mean, at the top of his game, retiring at 44 after, one of his finest seasons statistically, and just showed himself to be a focused competitor who cared nothing but, his love for the game and the mission at hand for a long time. And I want to say thank you to Tom Brady, because having to go through that evolution and accepting a healthy level of respect for an opponent and someone who I had spent a lot of time hating on, I think that's something that's healthy. So as opposed to the unworthy foes and some of these, like I said, just woefully moronic and buffoonish politicians whose interests are clearly at odds against people of goodwill, let's look for those who are enemies but who are worthy foes, such as Tom Brady. Tom, enjoy your retirement. Congratulations on an amazing career, and thank you for helping me learn a couple things here and there about the world. Okay, this week in cancel culture, and something that's not going to be a segment on this podcast, but let's be honest, if we wanted it to be, it could, and there's just nonstop of these little pseudo controversies in corporate America or the media, and this week's one was particularly just eye-rolling and demeaning because it surrounded notable intellectual and historian Whoopi Goldberg and the brilliant minds at The View. And so long story short, Whoopi Goldberg, born Karen Johnson, but she decided to adopt a Jewish moniker because she thought it would help her in the entertainment industry. Go look it up. Her brother stated, was very open in stating that's why she adopted that name. But, so obviously it was super appropriate to get into the topic of race and the Holocaust on The View, and Whoopi Goldberg thought that she had the baseline knowledge to start commenting on this topic, and she started arguing against the notion that the Holocaust and Hitler's hate for the Jews was quote unquote racism, right? I forget what she specifically referred to it, but because Jews are for the most part white, although Sephardic Jews, I think it's questionable because she classifies them all as Caucasian, that there was no racism involved. I mean, the degree, the levels of ignorance around the Holocaust, World War II, and Nazi philosophy that this exhibits are hard to overstate. And just why on the View, stay in your lane. You got to know when you're over your skis. This is not what you should be discussing. But, obviously Whoopi mentioned this, and it was very there was a big social media pile-on, and it was very quickly exposed that this was a ridiculous comment and just denied so much underlying information about, how do you think Hitler determined who was a Jew? He didn't care if a person who was Jewish was an atheist who never went to synagogue. The Third Reich had policies to determine whether or not a person was Jewish and thus was going to be sent to the concentration camps based on their genetics and their bloodline. And they were pretty much doing 23andMe to determine who was going to Auschwitz. So don't sit there and fucking tell me that this had nothing to do with race, or at least race as the Nazis conceptualized it. But regardless, what was the response here? Whoopi issues the apology and just kind of goes through this struggle session of how she needs to learn more and yada, 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 yada. And then after that was just inevitable. That's how these things go. But then The View goes ahead and still suspends her for 2 weeks. Did anyone ask them to do this? I mean, I'm Jewish. I know a lot of other, I would be hard pressed to find a Jew who thinks that there's anything to be gained from Whoopi Goldberg being suspended. I mean, in fact, it's kind of embarrassing because it really infantilizes the entire subject. That, we need to teach this 63-year-old or however old Whoopi Goldberg is woman a lesson, and by suspending her, and that's how we're going to make our karma deposit to society. And I mean, Jesse Singal on Twitter, I thought he gave voice to this. His response to the Whoopi Goldberg 2-week suspension: it's condescending bullshit is what it is. Like, we can't handle one celebrity saying a tone-deaf thing. I hate the safetyism. My ancestors were chased around Europe by bloodthirsty lunatics for generations. Both my grandpas fought in World War II, and here's where we are now. Like, this is just putting a childish sheen on otherwise important issues, right? Like, we all know that whatever is said on The View about the Holocaust doesn't really freaking matter. But it's now this part of the new social code, and particularly in corporate America, that you now have to go. It's like putting children on a timeout, right? It's like corporate America is now one big romper room kindergarten, and we have to do these little symbolic showings of giving someone detention or a demerit or the hall monitor coming around and telling them to not run in the hallways, and that's supposed to pacify whoever the supposed offended class or the offended group was. I don't know how. I'm not going to speak for other people who are members of ethnic or religious subgroups, but when someone says something a public figure says something tone deaf about them, I mean, you've got all the chattering heads yelling for some sort of punishment or consequence, but this all feels very condescending. Like, who cares? Like, oh, we're going to pacify the Jews by giving Whoopi Goldberg a 2-week suspension. Like, who are you trying to pacify? Like, is this how adults operate? Is this how an adult society operates? But this is how all of corporate America, and definitely corporate media, this is how it operates right now. It's like a freaking kindergarten. So that, and she'll come back in 2 weeks, and we all know this was completely meaningless and hollow. It's just very patronizing for them to think like, okay, we'll throw you a bone and suspend Whoopi for 2 weeks for her wrong think. And this approaching, the senior citizen woman will really learn some deep lessons by her 2-week suspension, and then she'll put up on a Holocaust museum next to this View studio. This is all ridiculous. Okay. Okay, so there was another one of these incidents this week with Jeff Zucker, the head of CNN, resigning. That was actually yesterday morning. So Jeff Zucker, kind of the Hall of Fame member of Failing Upwards in the entertainment industry, former head of NBC, has been the chieftain of CNN for about 9 years now, which I think also speaks a lot as to what I'll get to in a second. But he resigned yesterday. Apparently, I mean, you're looking, what's the controversy? Apparently, it was simply having a consensual relationship with a colleague, and not even a younger colleague that he had just hired or something like that. I mean, this is apparently he kind of fell in love or had a relationship with a woman that's been one of his lieutenants for 20 years now. And it's even strange. This is funny. This was revealed as part of the investigation into the Chris Cuomo sexual misconduct allegations, which is just quite poetic to say the least. Embattled CNN boss Jeff Zucker walked away from the network on Wednesday after failing to disclose a quote unquote consensual relationship with a CNN staffer. It says, "I acknowledge the relationship evolved in recent years. I was required to disclose it when it began, but I didn't. I was wrong. As a result, I am resigning today." So that is also now apparently a new rule, our social code in America. If you have a consensual, two adults have a consensual relationship, and if you are colleagues, apparently one person has to resign, or apparently, I guess, whoever the boss is has to resign. It's not like he was sleeping with an intern. He literally had a consensual romantic relationship with a pretty high level female executive. I mean, once again, this is how a society of children operates. This is like the childish environment that we had 100 years ago, where you needed an adult chaperone for 2 17-year-old kids to go out on a date, and women weren't supposed to wear a skirt above their knee. We didn't believe society could accept people exercising some free will or coloring outside the lines a little bit, and we have to treat people as so fragile with such kid gloves that we're firing anyone who carries on a consensual relationship with a colleague. This is a strange way. This is a strange new set of codes. And I mean, it makes me incredibly glad that I do not work in a big corporation in corporate America. And I mean, I ask this question often, how much longer can this go on? So more than meets the eye, though, on CNN and Zucker, though, and you start to wonder, is there more going on here? And CNN is part of Warner Media. Warner Media was recently, or is in the process of being purchased by Discovery. Discovery Media CEO David Zaslav, who was going to be Jeff Zucker's boss, I mean, he made some interesting comments recently because we're thinking of, okay, so just to back up, Zucker made his bones as a producer of the Today Show and then did a lot of work in reality TV. So it starts making a lot more sense while CNN became such a clown network and went from a news network to an advocacy sensationalist network over Zucker's tenure, because that's in his DNA. Zucker was the one behind The Apprentice. A lot of people kind of trace Donald Trump's rise back to Jeff Zucker, which is even more ironic on how Zucker kept his network CNN alive, essentially becoming the Donald Trump news network. So CNN drifted more in a reality TV show, tabloid or sensationalist direction. But then David Zaslav, Discovery is kind of just the facts. Discovery is a network's content supposed to have a little more gravity. And a couple months back, Zaslav gave an interview when he mentioned that he wanted to be very hands-on in running the new media company, and implied that he wanted to be more hands-on with CNN, and even outright said, I preferred news back in the day when it was more objective and less advocacy and opinion based. What did he say here? Yeah, in the 1990s, when MSNBC and Fox News launched, Zaslav said, the world was in a different place. I think overall we'd probably be better off if we just had news networks in America, but we don't. Media tends to be a reflection of where the country is. Where the country was when we launched MSNBC was much more fact-based and less divided. So, I mean, maybe this is part of it. Maybe Zucker saw the writing on the wall that Zaslav was going to come in, probably fire him, just based on performance alone, because they want to return CNN back to actual news, back to being an objective news network. While everyone kind of can acknowledge it's not at this point. Not that I know the response here is, oh, but what about Fox News? Yeah, I know Fox News is an advocacy network as well. Okay, stop with just the whataboutism. So this seems to be the new social codes in corporate America. Everybody is treated like a kindergartner. Say one thing out of line, ooh, we have to go put a dunce cap on you and have you go sit in the corner for a couple hours till you've paid the piper. Be in a consensual relationship with a colleague. Oh, that's the corporate environment cannot handle that. The people are too fragile. The system is too fragile. The ecosystem, and we're going to live by the tyranny of the human resources department that we want no controversy whatsoever. And these are the new rules. So I'm predicting that this is going to continue in corporate America. They're not going to take corrective course, and there's just going to be people are just going to, just like people have left a lot of big news organizations for Substack, a lot of people are just going to start new companies, right? Nobody wants to live like this. There's more money involved. These are scaled networks and organizations that pay big bucks, but at some point they start to shed and they start to deteriorate, and talent, and both executive talent and on-camera talent, is going to leave and go independent, because who the hell wants to live like this? Whoopi Goldberg, Jeff Zucker, that's just child's play. Let's get to the main event. Let's get to the main course. Joe Rogan and the attempt to cancel Joe Rogan off Spotify that has arisen and to a certain extent extinguished all within the last week. Joe Rogan has taken a bit of a COVID skeptics approach recently, interviewed a couple individuals who have shown some skepticism of the usefulness of the vaccine, blown up some of the other orthodoxies and pieties about the pandemic, and it's gotten a little controversial. But the oddest thing is, these interviews are all from at least about a month ago, but all of a sudden over the last week, over-the-hill former rock star Neil Young decides, I'm going to take it upon myself to launch a crusade against Joe Rogan on Spotify, and that he is amplifying dangerous misinformation about the vaccine, and it's either me or Joe Rogan, and I want my music off Spotify if they won't take down Joe Rogan. That wasn't a tough decision for Spotify. Neil was gone within a few days. So he tried to kind of stoke the flame here and create a bit of a groundswell to cancel Rogan. He was joined by a guy who plays guitar for Springsteen, Joni Mitchell, a lovely woman, I'm sure, did some great music back in the 60s and 70s. But I mean, she's also a boomer who's over the hill. There was a hashtag campaign, cancel Spotify. There were a lot of people with blue check marks on Twitter and social media talking about this, and obviously warning about the grave danger of Joe Rogan and his messaging. But Joe gave, what I would say is not really an apology, but a message, just kind of stating his perspective on it all. And I don't. It doesn't seem like Spotify is going to take any action other than some completely symbolic and hollow, label about misinformation that may be applied to some of his podcasts. Not that he is misinformation, but that people should be aware of misinformation. I mean, it's nothing. So this is another cancellation attempt that failed, but obviously is very telling about our environment. You listen to me enough, I think this is complete bullshit. I think the term misinformation is a pretty meaningless term. For some reason, inaccuracy, lie, or falsehood is no longer okay. We have to term something that we disagree with or that we think is wrong as misinformation. But let's look at what Rogan is doing, what the response was to him, and whether or not which one was valid and what it tells us about, the media environment these days. So the thing that gets lost in claiming that Joe Rogan's spreading misinformation is that he's an interviewer. He's conducting interviews. You cannot impute the views or what's being said by the interviewee to the interviewer. It's not Joe Rogan even necessarily making these statements, right? Throughout history, we can go and look at journalists and people who conduct interviews, interviewing all sorts of terrible people. Journalists gave Osama bin Laden interviews. Okay, Mike Wallace of 60 Minutes interviewed the Ayatollah Khomeini in Iran. And, does that mean Mike Wallace was spreading the message of death to America? Not necessarily. That's not how it works. It's the interviewer's job to ask questions, probe, search for information, and kind of play off whatever the interviewee says. And that's what Rogan did. Here's an even odder piece of why it's so odd that the controversy around Rogan sprang up this last week. It sprang up in regards to two gentlemen, Peter McCullough, who I had a conversation with, and Dr. Robert Malone, who aren't even necessarily super anti-vax, right? They seem to be vaccine skeptics to a certain extent, and I'll get a little more into the details in a second. But Rogan did interview a gentleman who I think does qualify as anti-vax named Alex Berenson about 2 months ago. No one seemed to get their panties in a bunch about that. For some reason, I think it's because so many people have already written off Berenson that they assume people didn't find that conversation a threat. But Dr. Peter McCullough, very well-credentialed individual, Dr. Robert Malone, partially responsible for the creation of mRNA vaccine technology. These are super credible individuals. And while, as I've discussed before on this podcast, and I think McCullough in his Rogan interview may have veered off in a couple unfortunate directions, I interviewed him, for the most, he did kind of correct or walk back a couple things he said on Rogan, and there are a few others that I'm still skeptical of, particularly in terms of VAERS data. But McCullough's been cited and published more than pretty much any living cardiologist in America. I mean, he's got some pretty significant credentials, and his thoughts and his views need to be considered, just like Dr. Robert Malone. So in his explanation, Rogan said, listen, I'm trying to figure out what's going on here. There was reason for skepticism. I saw a lot of things around COVID, around the pandemic, around the vaccine that weren't adding up. And these were two guys who were both highly credentialed, and they are. There's just undeniable that they're highly credentialed. So they seem to be very skeptical. So I wanted to hear what they had to say. I'm sorry, but that's okay. You're allowed to do that. You're allowed to interview people and hear what they have to say and hear their arguments. And you could make the case that Rogan should have pushed back on some stuff a little bit more aggressively, but that's not ubiquitously his responsibility, right? I mean, people have their own responsibility to go ahead and check out views, to consider, and also to see that Rogan didn't agree with them on everything. He probed them. He questioned them. That's how discourse works. That's how an interview works. And beyond that, just the absolute nerve and chutzpah of so many of these journalists and public health officials, after the amount of times they've been wrong about stuff, to still just be so mind blown that anyone's questioning their credibility. I mean, the couple people had some interesting ways of framing this on Twitter. For instance, a friend of mine, Bridget Fedesi, her tweet: "The fiery but mostly peaceful protest people are big mad. No one trusts them anymore." It's like, yeah, after you tried to shovel us mostly peaceful protests, after public health officials, after telling us that we needed to be locked up in our house for 3 months, all of a sudden we're justifying 10,000 person protests and pseudo riots based off public health concerns and saying that this was not a threat to viral spread. I mean, how are you supposed to, how are these people still claiming credibility? And how are they vilifying and demonizing people for turning to a person like Joe Rogan, who does seem so inquisitive and curious and very much humble? Go listen to Rogan's interviews. He's a very humble, polite guy. And they're treating him like some flamethrower who's saying things that's just, he's not doing what they claim he's doing. They're not, this is not just a matter of free speech, right? Of, oh, well, Joe Rogan gets to have a voice too. No, they're substantively misrepresenting, one, what he's saying, and two, what he's doing. He's engaged in a discourse. That's part of a process of seeking knowledge, right? Of testing out. And given how many orthodoxies or supposed truths turned out not to be true during this entire episode, this is a valuable exercise. I mean, let's tally them up. First off, the attempt to stifle any investigation into the origination of the coronavirus and the lab leak, and all the claims that the lab leak had been debunked, that we had it confirmed that this had originated from an animal at the wet market. That turned out all not to be true, right? We don't have proof that it originated from the lab, but we know that the claims that had been debunked were false, right? Making people wear a mask walking through the entrance of a restaurant, then taking it off when they go sit down to eat. When you make people do patently absurd things like that, you harm the credibility of the establishment, right? The people are looking at these absurdities and wondering, wait, something doesn't add up here. It doesn't make sense. As time went on and we started to see that, Jesus Christ, the harm from COVID and severe outcomes are so heavily concentrated amongst people, 55 or above, but public health officials and authority figures didn't want to acknowledge that, right? So these types of things create confusion for people. They harm credibility. When we were looking at different states, and this was my experience, when you were looking at certain states saying, we have to take these COVID restrictions or there's going to be death and carnage everywhere. But then other states were not taking those same restrictions and having generally the same results, right? And nobody wanted to account for that. Nobody wanted to account for, wait a second, this may be why we're trying to be a little more cautious, but we understand. No, instead it was complete scare tactics that, hey, if we release these restrictions, the hospitals are going to be overflowing. Nobody's going to be able to get their appendix out, and it's going to be something that you see out of movies. So once again, people look at this stuff and it doesn't add up. Then they told everyone, if Fauci, Joe Biden, Rachel Maddow, all these other people from the liberal media apparatus said, if you get the vaccine, you can't get COVID. It said you will be a dead end for the virus. That turned out not to be true. Right? When you keep on making these pronouncements, these dire pronouncements or these conclusions, and they keep on turning out not to be true, people are going to start trying to find an explanation. They're going to start poking around. And that's what Rogan, just as a guy, just as an individual, was curious and wanted to see if he could find a deeper understanding of these issues, because the establishment narrative that he was being told was not true. He kept on finding things that were false, and he was totally justified in doing so. So what place does Joe Rogan occupy here? Because his critics at this point want to paint him as Alex Jones, as some performance artist, flamethrower, conspiracy theorist who's trying to just find the most unorthodox, phony, sensationalist headlines and claims and conversations just to throw red meat to his audience. And that's simply not true. That's not who he is or what he does. So a couple people who are commenting on this topic. Zaid Jalani, who I mention a lot, Joe Rogan's appeal isn't that he's a truth teller or a subject matter expert. He doesn't claim to be a journalist or operating a professional news show. His audience of millions just appreciates someone who approaches the world with curiosity and humility. That's okay. Joe Rogan can be a normal guy who likes to have conversations, who can explore topics and test out information and points of view to see whether or not they are accurate or not, okay? And that's exactly what he's been doing with some of these COVID contrarians. And here's the thing, I hate to break it to you guys. A lot of what these guys say is true, okay? How about natural immunity? Go look at the comments, go look at the literature in terms of what Robert Malone says, what Peter McCullough says about the power about the effect of getting COVID and having an immune response and immune protection from being infected and recover. Go look at the studies, okay, and see if they're more supportive of McCullough and Malone's points of view on natural immunity from prior infection or that of Fauci and the healthcare establishment. I'm sorry, the totality of the evidence and the facts are on the side of the contrarians. There's some other stuff in terms of the vaccine that still seems to be a little hazy in terms, and it seems that McCullough and Malone might be off kilter. But that just means that you're just tallying up the scorecard here, okay? This is not that one side has the monopoly on misinformation and the other side has the monopoly on truth. That is simply not what we're doing here. Another what I thought was very insightful perspective on this on Twitter. It's an anonymous account, but it mentions the magnitude of Rogan's presence in COVID discourse is a direct function of failure in official institutional sanctioned sense-making. Censorious midwits are the cause of, not the solution to Rogan's influence. Joe Rogan, just a normal, inquisitive, curious guy, has more influence and more people are looking to him and his show for truth and understanding on COVID because so much of what they've been told by the establishment turned out to be bullshit. And it would be nice for the establishment to finally own up to that, but it seems like that's beyond them. Instead, they're going to go and try to silence the voices that are calling them out, that are exposing them for being wrong on stuff. Joe Rogan's not saying, I know everything about the pandemic. What he's saying is, what I'm being told and what we're being told by the establishment doesn't add up, so I'm going to go on an exploration. I'm going to go on a truth-seeking mission to see if we can figure out, if we can gather a better understanding of all of this. And that's what he's doing. There's absolutely nothing wrong with it. And to the extent that that does have grander implications for quote-unquote free speech, I mean, yeah, people should stick by these principles. And people always love to hide behind. It's such a cop-out of, oh, these are private companies. They're not obligated to give voice to everybody. The First Amendment only protects you from government censorship, not from private company censorship. Mike Solana had a good retort to this. The pro-censorship squad loves to fall back on, this monopoly speech company is a private business, so the First Amendment doesn't matter, which is technically true but runs from the point. Do you believe in the value or not? If not, why support the First Amendment at all? Do you believe in free speech? Do you believe that this is a positive force, right? If you do, you should try to honor that principle even if you're not legally required to do so. And you should advocate that companies and third-party actors also honor the spirit of that. We should want private companies to honor the First Amendment, even if they don't have a legal obligation to do so. Right? And these social media companies, they kind of, it's another conversation of whether or not they resemble utilities or common carriers, but they have a lot of characteristics of companies that could be regulated and thus forced to adhere to the First Amendment. So either advocate or support the principle or don't. You don't get to just hide behind the First Amendment when you feel, or use the First Amendment when you feel like it's convenient or non-threatening and say, oh, well, as long as the government's not shutting off anyone's speech, it's okay. No. Either you think free speech and free expression is a positive force or a negative force. So if you think it's a negative force, at least own up to it. And then beyond that, I mean, the cancellation attempts just completely failed. It was a pitiful failure. Like literally Neil Young and like 3 other 80-year-old people were the only ones who took their music off Spotify. They didn't do a goddamn thing to it. Spotify knows Rogan's the most popular person in audio and in podcasting by a country mile. Okay. If they took Rogan off Spotify, you know what's going to happen? He just takes his content back to all the other platforms and he has a bigger audience than ever. I mean, aren't these people, the pro-censorship crowd, aren't you tired of failing? Aren't you tired of looking stupid? Right? In the name of shutting down speech, which sometimes if we are putting together the scorecard of how his level of accuracy versus the level of accuracy of the establishment that's trying to shut him down, I mean, his score's looking pretty good, right? It's just unfortunate that so many people in positions of authority who have a voice have gotten comfortable advocating for censorship, even though it usually doesn't work, particularly when you're trying to take on as big a fish as Joe Rogan. It's just a very bad sign for our social fabric and for where we're at, that everyone thinks this is a good thing. That, ooh, I'm gonna exercise my heckler's veto by trying to financially harm Spotify. That I think I'm doing something super noble and admirable by threatening to take my music off Spotify. So they'll shut down any conversation that Joe Rogan's trying to find truth. I mean, this is not noble. This is not what good people do. So who knows? Maybe they will continue to take L's here and there. This one this was a complete L. I mean, it's been a week. If they were waiting for a cascade of big name musicians to take their music off Spotify because of their outrage over Joe Rogan, it's not happening. Neil Young, enjoy. Oh, and that was one of the most ridiculous parts of this. This is all being done in the name of capitalism. After leaving Spotify, his big rebellious move was to leave Spotify for Apple Music, the biggest company in the entire freaking world. So within 2 days, at the top of the Apple Music carousel, you see Neil Young's music being promoted. I mean, this is just so ridiculous. It's self-parody of an aging rock star who once was a rebel and now is kind of exercising his supposed rebelliousness by jumping from Spotify to Apple. It's ridiculous. So Joe Rogan, continue to represent the curious, humble everyman. I look forward to the many conversations he's having. Yeah, I hope he becomes a somewhat more adversarial interviewer because I think it would help his cause, and it would lead to more truth if he puts his guests' feet to the fire a little bit more. But his behavior thus far has been perfectly fine and perfectly reasonable. He adds to the conversation, and given the state of our public discourse other than him, we should be very glad to have Joe Rogan around. So, ladies and gentlemen, this is the prevailing narrative. And you know what's been on everybody's mind recently? The stock market and the economy. You've got the stock market taking a dive, crypto taking a dump, inflation running rampant, the Fed trying to turn off some of the gas from the overheated economy, chaos in the markets. And to help us make sense of it all is Tobias Heaslip. He is the CEO and founder of Trading TV. Tobias, thank you for joining us.
Thank you so much for having me. It's a pleasure to be here.
For sure. And aside from us being friends and me having a lot of respect for you and what you're building right now, one of the reasons I wanted to have you on is because you have seen you've been on every piece of the chessboard in the financial world. You've worked at major financial institutions. You've worked as an equity analyst at one of the big banks. You've been a director of trading at a boutique investment bank. You are building a business around retail trading, and now you're a startup founder. So why don't you tell us a little bit more specifically about your background and kind of how that fills out the entire landscape of the financial markets?
Yeah, absolutely. So I spent about 10 years on Wall Street working on both the buy side and sell side of the street. Started my career at Goldman Sachs. I went to Morgan Stanley. It was an unbelievable time to be a part of Morgan Stanley because it was actually the first time that social media was becoming an investable asset class. So it was very just synergistic with me being a millennial and using these products that they asked me to cover them from an analyst standpoint, which of course I accepted. At the time, everyone thought that social media was a flash in the pan, right? It's like we had just come off of Friendster, having a massive run up and then dying off, MySpace having a massive run up and dying off. So like Facebook comes along and was going public. I think most people expected it to be a 6 to 12 month trajectory. And then for this to be a non-existent platform, it turned out that social media actually became quite a thing. So that was great for my career. Went from there to a hedge fund called Oxif, where I ran trading for a little bit, and then was at Barclays, where I ran trading across all of the TMT. So that's technology, media, and telecom verticals. And then I founded Trading TV last year. So it's been quite a decade, mostly a bull market, pretty much a continuous bull market for the last decade. So if we are going to go into a prolonged bear market, I think it would actually be technically my first real one, but I'm ready for it.
Yeah, fascinating inflection point for you to be building this company at. And to that point, and to frame our discussion coming up in a second about the macroeconomic environment, you were on a podcast of some friends and clients of mine in the group over at Group Chat in October with a bit of a different market and macro environment. You mentioned a strategy that you'd come across with an anecdote during your times at the bank called the up and to the right strategy. So why don't you tell us about what happened with the up and to the right strategy, and that will kind of lead us into whether or not that strategy is no longer feasible.
Yeah. To be clear, I was joking. I mean, the event did happen, but I was joking about the actual strategy. But in this market, we did experience sort of a FOMO culture for a really long period of time. And, we'll dive into what was fueling that. But the idea that, you just had to be invested in whatever asset class, no matter where the price was a prevailing narrative that took place, for at least the last few years. Specifically within like crypto, but to a certain extent within equities as well. And yeah, I mean, at some point in time, the music does stop, right? And I think we've been playing this game of hot potato for probably longer than anybody had imagined. I mean, I know a lot of people that are professional investors that focus specifically on short selling, which have been carried out. You know, they've lost their funds over the course of the last 2 or 3 years because they'd never seen anything that they felt like was as inflated as the environment and the asset prices, both in the public markets and private markets that we've experienced over the course of the last 24 and 36 months.
And essentially they said they figured that given historical cycles, we were at the end of one. They found that it was a safe time or a shrewd time to be short selling, and the market cycle lasted longer than their best estimates had expected.
Way longer. I mean, there's the quote, the markets can stay irrational for a lot longer than you can stay solvent. And at some point in time, like a lot of the hedge funds had pretty much given up on the short side of things. And even companies that I feel like were widely accepted as great shorts, GameStop, for example, had just totally punished people. I mean, the numbers for Melvin, the fund that was very famously short GameStop during the whole, run up on Robinhood and everything else, they just came out and they're still 50-60% underwater from what was effectively like a 2 or 3 week event. Right. So most people just aren't willing to risk their funds on short ideas anymore. And so I feel like now is the perfect time for it to actually occur where the markets do go down, because there's very few people that are actually profiting from this downturn.
No doubt. I need you to just explain give the anecdote behind the up and to the right strategy. It's too good.
Yeah. So I was working at a hedge fund, and you're a new analyst at a hedge fund. So one of the things that you want to do all the time is you want to pitch ideas. And so I had a fairly technical background. I'm not a certified technical analyst or anything like that, but I know how to read charts. And so I was in the process of conducting technical analysis, and just to give people an understanding of how it works. And when you work at a hedge fund or you work at an investment bank, there is no privacy. You're not in an office where, I mean, if you're a big time PM or something like that, maybe they give you a private office, but the vast majority of traders and analysts sit on a desk, and that desk is 10, 15, 20 computers in a row. Everyone's got 2, 3, 4, 6 screens or whatever. And generally people just walk by and they can see what you're working on or whatever. So I was doing technical analysis on a particular stock. I forget which stock it was. And one of the head guys that was at the fund walked by and he's like, "What are you doing?" And I'm like, "I'm doing technical analysis. I was actually getting ready to pitch this to you in a little bit." And he's like, "It's very simple. If the chart is in the upper right-hand corner, it continues to go towards the upper right-hand corner. And if the chart is in the bottom right-hand corner, it continues to go to the bottom right-hand corner." And I was like, all right, so I guess, I won't pitch this particular idea.
Yeah. So the idea of momentum and things that go up, keep on going up, and something that if you're steeped in market fundamentals and read the great, let's call it Peter Lynch texts of investing, from days of old, or even some of the principles of Warren Buffett and Munger, up and to the right it doesn't really seem feasible. Then along comes the 21st century and the market environment, other than the quick blip in 2008 to 2010, and in particular in 2010s, all of a sudden up and to the right doesn't seem like such a bad idea. It's just a kind of universal strategy there. But all of a sudden, to the extent that you could ride that strategy out, the market the last 4 to 6 weeks suggest otherwise. So why don't we get into a little bit about what's going on from a macroeconomic perspective? Something that a lot, the layperson is very familiar with is just the notion of short-term interest rate hikes. But beyond rate, that's not the only factor and variable going on here. It's also what's some people refer to as balance sheet normalization and the concepts of quantitative easing and quantitative tightening from the Fed. So maybe if you can, to the extent, give us a bit of a primer on that aspect of it and what's going on right now.
Yeah, absolutely. So I think at a high level, it can get extremely technical, it can get extremely confusing, but at a high level, what people need to understand is the Fed putting liquidity? And when we say liquidity, we just mean, are they putting cash into the system, or are they taking cash out of the system? And so since 2007, 2008, the beginning of the Great Recession, that was a real estate driven recession. The Fed has been expanding their balance sheet to unprecedented levels. And we've never seen a Fed balance sheet anywhere close to the levels that we've experienced thus far. And so what happens when they're in an expansionary Fed balance sheet environment is all asset classes are going to be inflated, because there's just cash in the system. So that exists for commodities, it exists for real estate, and it certainly exists for equities. Why? Because despite the best efforts to be able to get the little guy the money, at the end of the day, the system just works where even if the little guy gets the money, then it ends up going to the owner of the business. What does the owner of the business end up doing? Well, they're an investor, so they put money into stocks and it kind of continues to inflate those assets. So we've now been, I think, we're in 2022, so 13, 14 years of an expansionary environment. And really, for the first time during that period of time, we've reached the inflection point where inflation's now at 7%, and the Fed realizes that due to their mandate, they have to take action, right? So how do they do that? Well, the first thing that they do is they stop purchasing treasuries. So they're actually going to physically stop buying bonds.
And so just real quick, in terms of the Fed, quote unquote, printing money, because that's the layperson term, that is where the money printing comes in, because they print the money to buy the treasuries and other assets, correct? Other debt, right?
Yeah. So, I mean, just looking at your personal balance sheet, right? Like if you have an expense, you have to pay cash for it. Or you can, I guess, like get some form of credit, right? But like at some point in time, if there's something that you can't afford, like you just can't buy it. Well, that same dynamic doesn't exist for the Federal Reserve because they enjoy the luxury of being able to control the currency in circulation. So if something comes up, like a pandemic, for example, and they think that it's going to take $2 trillion of cash injections to be able to support the economy through the pandemic, and they don't have that on balance sheet, or they don't have it from tax revenue, they just print it, right? It's like literally right click Excel, enter 2 trillion, enter, and then go for it. And like, that problem is now it has to be solved somehow in terms of the effects of it. So the effects of it were, yes, the economy sustained economic growth throughout the pandemic, which a lot of people didn't think that it would be able to. But inflation is now the issue. And so when you see a number like 7%, a lot of people are like, yeah, 7% feels, it doesn't sound like a lot, but when you start thinking about the things that people actually use and do on a daily basis, groceries, Ubers and Lyfts, food delivery, rent, a lot of that stuff's up way more than 7%. And it's starting to affect people's lives, right? So what the Fed is doing now is they're stopping the purchasing of assets. So they're stop printing and stop buying bonds. And then on the other side of it, they actually move interest rates up. So like right now we're at, I don't know, like 0 to 25 or 0 to 50 basis points target Fed funds. And like the market's now anticipating 3 rate hikes this year. Just to give people some context, right? Like we've been dealing in a basically 0 interest rate environment for quite some time. In the 80s and 90s, like prime interest rates were in the teens. So, it is feasible to believe that economic growth could occur in a high rate environment, but because of the whole hard landing anticipation, obviously there's like a little bit of concern, and that's the reason why assets are selling off.
And so I'd love your thoughts on the recent statements from Fed Chief Jerome Powell, but also in terms of what we can anticipate in terms of rate hikes, but also that's one, and two, what really can be the impact of raising rates from historically low levels to just above historically low levels, because that's what I'm trying to make sense of right now. I think a lot of other people's like, okay, we understand that rates at the historically low levels they've been at for so long will lead to a lot of of asset appreciation and inflation, particularly amongst high growth companies. But okay, so what's going to be the impact of some kind of mild rate increases? Because listen, if even under the worst case scenario, we're not going to find ourselves back at 6% interest rate short term, 8%, or even the double digit interest rates that we saw in the 70s and 80s and sometimes into the 90s. So what really what can the market digest, or how does it digest, once again going from historically low to just above historically low?
Yeah. So this cycles because of the rate of technology and the rate of technological change and how that accelerates the cyclicality of the economy. Things tend to move much faster now than they had in the past. So you could make the argument that a lot of the move that we've seen over the course of the last, 4 or 5 weeks has been pricing a lot of this in. Like if you look at where, futures rates are trading, like they're already building in a 3 interest rate hike, like Bitcoin's off 50%, right? Like stocks are down between 10, 15, some of them 20, 30, 40%. So these things tend to get priced in. Like the best best example of it was actually in the pandemic, right? Like the world was ending, like literally zombie apocalypse was on the table of potential possibilities. And then they hit stocks down, whatever it was, 50-60% in like a short period of time. And then it becomes about, okay, what's the go forward? Because the market is a future looking market. You're not looking in the past. It's the reason why you can't like trade Google searches or whatever, because you're looking at what's going to occur in the future and then discounting that back. So when you look at the pandemic, it was like, okay, you hit things to what the market perceived to be the worst possible levels. So looking at that now, how does that look in terms of the interest rate hikes? I think it's probably a more prolonged time period. So we need to cool inflation from like 7% down to 2% or thereabouts. How quickly can that happen? It can happen fairly quickly. But that means that there's most likely a recession in there. So defined as like 2 consecutive quarters of negative GDP growth. So that probably takes somewhere between like 6 and 8 quarters to be able to accomplish.
Understood. And so interest rate hikes are one piece of kind of shifting macroeconomic winds. The other piece is, and this is something I think a lot of people have heard about, quantitative easing or understand the concept, but quantitative tightening is one that they don't necessarily understand. And that is also, and some of what it is the concern now, at least from what I've seen amongst some very shrewd market observers, is that 6 months ago, we were anticipating some interest rate hikes or quantitative tightening, but we weren't anticipating both. And with the when inflation turned out to be not transitory, but more substantial and permanent and tangible, that now with both of those at play, that's what it hit the market so hard. So if you could just explain quantitative tightening more specifically, because I think some people don't necessarily understand that other than conceptually as the evil twin of quantitative easing.
Yeah, the easiest way to describe it is that it's harder for people to borrow money. And it's more expensive for people to borrow money, right? So like the sourcing mechanism for the banks becomes a more expensive sourcing mechanism. They have to pay more money to borrow money from non-depositing accounts. So then when you go to get a loan, like the bank is going to say, okay, actually, we're not going to give you this loan right now because it's more expensive for us to get the money. And so if you want the loan, either there's a higher hurdle rate that you have to jump over in order to be able to get it. So you have to have a better credit history. Your business might have had to be in existence and showing, positive growth or cash flows, or you're not going to be able to get the loan. And then if you do get the loan, as opposed to paying a very small interest rate, which would incentivize everyone to go out and borrow money and then go into the world and spend that money or invest it or whatever, the interest rate's actually going to be much higher on that. So the effects of that are valuations start to come down because there's less money in the system that are chasing opportunities. So you've already started to see that happen in the public markets. I operate primarily as a founder in the private markets. And so there's a big conversation right now as to what's going to happen to startup valuations, because, you've seen, it used to be a very big deal to be a unicorn, right? Like there was only, a handful of companies during the initial wave of startups that became unicorns, and like they were celebrated and the founders became celebrities and whatever, right?
Yeah.
Now I forget what the total number is, and this number is like changing daily, but as of like, last year, there was like 700 unicorns in the private markets that had gone, you know what I mean? So like you're dealing
like now you got to be a deca unicorn.
Yeah. Now that's the thing, right? Is your company has to be worth $10 billion in order for you to like, achieve like any decacorn status or the accolades that go along with it. So, it'll be really interesting to see what happens to startup valuations. My guess is that the same thing that applies to the lay individual in terms of his ability to be able to finance daily activities, get loans, for either purchases or for investment purposes will become more difficult and or more expensive. That probably happens to startups as well, meaning like the VCs that are out in the marketplace that are deploying investor capital are going to be more selective of the companies that they invest in. They're going to push back harder on founders like me in terms of the valuations that we're putting on our businesses. There's going to be a requirement to show, material metric growth, whatever is applicable for your particular industry. And I think that's a good thing. I think it's a really good thing.
For sure. And that brings me to a related point about, the monetary base in terms of it staying stable based on the money that the Fed has injected into the system versus the Fed siphoning money out, right? From what I've gathered around quantitative tightening, the debt that the Fed has been buying is thus transferred, and that's that is a cash-based transaction. The Fed is essentially receiving cash in this from certain intermediary financial institutions, and thus taking cash out. It's almost like we haven't just stopped printing money. We're now actively taking money out of the economy. Is that correct?
So the way that it works is the gold standard on anyone's balance sheet from like a banking perspective is always your treasury assets, right? So like like in terms of financing the government, like there's a agreed upon thing, and like, you know, people will disagree or whatever, but like the United States will never default on its debt. So that's like a AAA asset. And so when you need to raise capital, like you can sell basically an infinite amount of treasuries to the Fed, and the Fed is by mandate the buyer of last resort. So there's always a market for you to sell those assets. And so when you're selling those assets, the Fed is literally they're trading cash for a piece of paper, and then they're just holding that piece of paper on balance sheet, which then is paid from the government in the form of an interest rate, right? So when people say they're taking money out of the system, we're not going to a place where like the Fed is selling down its current holdings, or at least not in like a major way, but they're stopping the purchasing of it. So they're probably, I don't have the numbers in front of me, but they're buying like billions and billions of dollars of these bonds per month. That's no longer going to be occurring, right? And just to take it another step further. So as the reason why this mechanism exists is also because it's the way that you maintain above and beyond the target interest rate, the Fed funds rate. There's an inverse relationship between bond prices and the actual rate. So if you're buying them, then you're pushing the price of the bonds up, which then pushes the interest rate down. So if you want to be operating in a low interest rate environment, then you're continuously purchasing these things for the purpose of driving the price of it up, which then keeps the interest rates down. In the absence of the purchasing, then the selling occurs. So the price of the bond is then going lower. The interest rates then go up.
Got it. Okay, so that is the very technical explanation of how this whole economy thing works. Now let's talk a little bit more about how it tangibly impacts, your people's investments prospectus, or a lot of the companies that they deal with on a day-to-day basis. High flying, high growth tech stocks, right? These are get a lot of focus because they're the names that a lot of people use on a day-to-day basis, given the size of their user base. And I mean, this is something that I like to when I think people have a slightly distorted perspective over what a bubble, quote unquote, looks like in 2022 as opposed to what prior bubbles have looked like. I think it's very helpful to try to draw some distinctions to what happened in the first .com era, right? In that prices went out of control, a lot of speculation, and they plummeted. And then it probably, think about it just from in the e-com sector, pets.com, a bunch of the first handful of companies that decided to put .com at the end of their name and were selling stuff online, got insane valuations. 2000, 2001 bubble pops. You had an entire generation of early startup employees that thought that they were about to retire, and all of a sudden 2 months later their stock options were worth nothing, essentially. And then you start, Amazon stays the course. Another generation of e-com companies starts to pop up back in, let's call it the mid 2000s, and they start making some waves late aughts and the early 2010s. And then all of a sudden by the early 2010s, you have an entire sustainable economy of e-com companies, and you have these e-com these flash sale sites, the Groupons of the world, and these are legitimate startups, whatever you may call some outsized valuations. And then since then, there's no bubble that has popped. Okay, all these e-com companies that have grown, even with valuations that seem to outstrip their financial fundamentals and revenue, there hasn't been any pop there, right? So it seems like we continually go through this cycle of items that are overhyped, that based on are overhyped in the short term, but are actually properly evaluated over the long run. And so while we may see, as you mentioned earlier, with a more connected world, a shorter cycle here, whereas from the early 2000s bubble popping, it took probably 8 to 10 years for the e-com environment to once again, for those companies to grow into a true ecosystem. It's unlikely that it's going to be that type of horizon here. No. You're probably going to see some sort of kind of mild correction, or even in the a less mature space like crypto. I mean, the cycle of boom, bust, and rebuild into a tangible ecosystem is probably going to be a lot quicker, I'd imagine.
Yeah. So a few things on that. So there's not a lot of parallels that can be drawn between the dot-com bubble and what we're experiencing now for a few different reasons. One, the venture capital environment in the early 2000s was basically, I mean, it existed, but it was way smaller than it is today. So what you had is a mechanism of financing is you had a lot of companies who today would be VC-backed companies, which were publicly traded at the time because that was the only mechanism to be able to raise capital. I think a lot of people, forget that the reason to go public is to raise capital, to then operate your business, right? So in the absence of capital in the private markets, a lot of these businesses had to go public, and they went public much earlier than we would see companies go public today. Why? Because companies in the private markets today can go to venture capital firms and they can get funding that way. So what you had a bunch of early stage companies, a lot of them pre-revenue. So we would consider them to be, seed, pre-seed, Series A, maybe some Series B companies, which were trading at on a public exchange, NASDAQ, NYSE, whatever. And at the same time, people were projecting out the growth of the internet. And so it was kind of like, all right, great, rising tide lifts all ships. Holy shit, there's only a few million people that are on the internet right now. 10 years, 20 years from now, 3 billion people are going to be internet users. And like you do the math or whatever, and you can get insane valuations. Those valuations were then applied to companies that were non-deserving. We're not in that environment today, right? Like the vast majority of companies which hold market caps that are huge on NASDAQ are real businesses. We're talking about Apple, Google, Facebook, Amazon, these are real companies that are generating tremendous amounts of profits. And we can argue about whether they should trade at, $2 trillion in market cap or 1.7 or whatever, but it's not going from 2 trillion to zero. That's just not going to occur. So what happens is you get a bunch of these companies that are sort of in the middle that probably have extended valuations. I'm talking about mostly SaaS software businesses, which trade off a price to sales mechanism.
Well, I think Salesforce is an interesting one to look at in that cohort. Yeah, they're still trading at like 130 times earnings.
Yeah. So there's a period of time where businesses go from a price to sales. Like when you're an analyst, you're looking at things on a revenue basis to begin with. Why? Because below the line, you can basically financial engineer because you're trying to reinvest money into the business. So you're looking at top line revenue growth until the business matures. But if you would have told the Warren Buffett school of investors or whatever in the 60s and 70s that we were no longer going to value companies off price to earnings, we were going to look at price to sales, they'd be like, that's fucking insane. Yeah. But that's how you look at software businesses, because when the revenue is going the right way, you want to be investing every dollar back into the business to grow top line. You worry about expansion of margins later and profitability later. So Salesforce is now a fairly mature company, right? So they're going to start to be evaluated more and more off what they can do from a profitability standpoint. But those companies, that's not the Salesforce or whatever, maybe sells off a little bit, but it's more of the, the company that hasn't broken a profit that trades at 50 times sales, 60 times sales. Those are the ones which will start to get hit really, really aggressively because there'll be a question as to whether or not profitability can ever be established, right? Not as to whether or not they're doing it intentionally, but as to whether there's a path forward. So the best example of this that comes up a lot is the gig economy stocks. Can Uber, can Lyft, can Grubhub, are these businesses that can make money long term, actually physically produce a profit?
Yeah. And so the outlook, because you've got these companies, you've got the blue chips, the Netflix and the Googles, the Amazons, and the Apples, and they've already grown beyond what some people ever believed was but people did not expect to see $1 trillion market cap companies. And then they came pretty quick. And in fact, it's even more surprising because they were companies that hadn't really at the beginning of the turn of the millennium. I mean, you didn't have any $1 trillion companies, and it was a question when you were going to see one. But then the fact that it was companies that hadn't even really reached scalability at such time was pretty shocking to people. So then you think, okay, wait, they've got to be hitting a saturation point. How much more can they grow? But then you see Apple continue to purport absolute monster earnings, right? Over and over and over and over again. And so
with supply chain disruptions, by the way. Like
Insane.
they're beating revenue. They beat revenue by like $6 billion last quarter.
Jesus.
Granted, the estimates were probably slightly lower because everyone expected there to be some sort of impact, but like they literally have like cargo ships worth of product that can't get delivered to stores, which are materially impacting their ability to actually generate revenue because they don't have a phone to sell you or they don't have a Mac to sell you. It's like sitting on a cargo ship in China or in Port of LA or whatever. So like, yeah, you're right. Like these businesses, and it's not just the core business of what it can do. It's the ancillary businesses that exist that can then add to revenue and profitability as a result of the core business being in place. So like Amazon's the best example. Like when you tell people, oh, you know, what does Amazon do? They're like, oh, it's an e-commerce player. Yeah, it is. It's also the world's largest cloud computing company, or like one of the top
AWS.
three Amazon Web Services. So like me and every other founder, like we pay Amazon every month for the right to be hosted on their servers. Right? And like, you know, this, if you were to break up Amazon's market cap into tranches, you know, like Amazon Web Services would probably be, if not $1 trillion business, like close to $1 trillion company that spurred from Amazon's e-commerce business. Why? Because there was no one that had enough servers to be able to service the needs of Amazon's explosive growth. So they're like, fuck it, we'll just build Amazon Web Services. Okay, now we have extra capacity. So like, you know, if startups want to tack on to our cloud computing, great, right? That same thing exists. Like Apple didn't start as a phone company. It started as a computer company, right?
Yeah.
Like they sold desktop computers. Probably one of the least sexy businesses that Apple is in today. Most people think of Apple as a hardware company. No, Apple's a software company. Like if you're on the App Store, if you want the privilege of being on the App Store, 30%, I think they just lowered it to 20, but whatever, between 20 and 30% of all in-app purchases go to Apple. So like you could literally run the Gillette razor, the Gillette model for razors, where they could be like, here's the phone, just take it, right? And like, it's still a profitable business because people are going to spend money on the phone and they're going to generate revenue. Like no one conceptually understood what an app, what the possibility of like an app store would be. And now it's a duopoly, right? Like they're either on Android and Google, or you're on iOS and Apple. Both of them coincidentally have the exact same pricing metric. So like you can't go to one and say, oh, you know, fuck it, like we're going to save some money and go over to Google. It's like, no, it's the same price. And so like, what is that worth? I mean, you know, it's obviously worth trillions of dollars.
And also because I want to, you know, as this leads into your thesis for starting Trading TV, which I want to get to in a moment, there's certain kind of, let's call it infrastructure, the characteristics of infrastructure in the digital age and the globalized age, right? When you're dealing with entirely global markets and in a generally connected society, that the potential addressable market for an Amazon, Google, Apple is just beyond what anyone had ever contemplated before. And then, you know, an analyst I read a little while back when thinking about what Apple could grow into being said, think about how much of the world still hasn't been onboarded fully into either one, the digital world, or two, a kind of tier one hardware digital universe. And that's still a lot of people, right? So Apple's still got a ton of room to grow. So similarly, retail, well, global markets, that the supply chains that when working can service that and it can service that global market. This really changes the game, much like, you know, a more connected society, and retail trading platforms like Robinhood now make retail trading feasible. So maybe you could tell us a little bit about retail trading, the extent to which that informed your thesis behind Trading TV, and like I said, some of the kind of underlying infrastructure that's made it all possible.
Yeah, absolutely. So I've always been a big believer that financial markets were made out to be much more complex than they actually are. And I know we've gotten fairly technical in this podcast. So my hope is that people that are listening to it are not like scared away by these concepts, and they can understand the vast majority of what we're saying. But
that's what we do on this podcast. We try to scare people. We see who's still around, and then we give them the good stuff. So now we're talking.
So when I was on Wall Street, I was really kind of shocked by the amount of effort that went into convincing people, and these are like institutional clients or whatever, how complex something was. Because if you could convince them that it was complex, then it just became like, okay, great, like you can charge me whatever you want for this service because I can't do it myself. Well, the retail environment has been sold that myth since the beginning of time until now, right? So people were basically, if you wanted to invest in the stock market, then you either had to like go to Fidelity or Charles Schwab, and like there was this concept of, I need a financial advisor. Like, not people that have like, if you're worth hundreds of millions of dollars, you need a financial advisor because you have a huge amount of assets that need to be tax efficiently deployed and whatever. But for like the average person that's got 25, 30, $2,000 or whatever, like they shouldn't be using a financial advisor. Like you can definitely do this yourself. So Robinhood popped up with this concept of commission-free trading. And that was a very disruptive thing for the industry. And it was something that actually should have existed a long time ago, but it didn't, because it didn't benefit anybody who was in the industry before and was charging egregious commissions to cut the commissions to zero. But it could have existed a long time ago. So they disrupted that. And now with the one thing that they've done really well, like I'm obviously not a huge fan of Robinhood, but the one thing they've done really well is they've introduced whatever it is, 20, 25 million people to financial markets who probably wouldn't have been invested in financial markets otherwise. And that is a incredibly positive thing. So the retail environment right now is saying, okay, we're going to have a resurgence of this whole do-it-yourself concept, where the young people today, they just do not buy into this concept of like, the only way to get wealthy is to like work at a corporate job and invest in your 401k and marry well and buy the first house and the value and the equity in that. Like, no one wants to hear that. Like, everyone knows that there's a million exciting opportunities that are going on, whether they be in stocks, whether they be in crypto or Web3, like whatever, right? NFTs, like there's all this shit that's going on. And like, people just want access to it because they feel like this is the way to be able to get financial independence quickly. And so what we started Trading TV was the mechanism to be able to centralize the content around that. So it doesn't matter whether you want to be invested in stocks, crypto, NFTs, trading cards, rare sneakers. It's a centralized platform where creators are on there that are providing educational and entertaining information about a myriad of different assets, hopefully every asset that you can conceive of. And then because you're already on platform and you're there to learn about, let's say, an NFT, we also facilitate the transactions directly on platform as well. From an infrastructure standpoint, the reason why Trading TV hasn't existed previously is because you had to build two sides of the house before. So like there's the social layer where you're distributing live stream or VOD content, transaction layer where you're actually facilitating money in transactions. So now there's companies that you can utilize to be able to solve both sides of that problem. So like we can effectively just take those products, marry them together with an API integration and focus on, customer service, delivery of the content, things like that, which previously wasn't possible.
So you can make Robinhood and Twitch or YouTube into the same platform. You make it a hybrid.
Yeah. Exactly. Yeah. And by the way, like, talking about how early we are, like in order for my platform to work, 5G kind of like has to be a thing, right?
Yeah.
I think there's this assumption, by people that like technology is just way ahead of where it actually is. Like just taking Instagram, for example. I mean, again, people hate on Facebook, but when you post a video to Instagram, like it uploads seamlessly, it plays seamlessly, like all of the billions of transactions, the comments, the likes, the sharing, like all of that stuff happens across like a billion person user base flawlessly and like very rarely goes down. And yet like no one understands like the technological feat and accomplishment that is. Like it is mind blowing that someone was able to figure that out. Amazon does the same thing, but they're also moving billions, trillions of dollars around.
You get the damn delivery the next day, no matter where you are. It's incredible.
Sometimes it comes in 15 minutes. Like, so it can't be understated how difficult that is to do. But from like my perspective, live streaming, like why is live streaming not bigger thing yet? Well, because the actual distribution mechanisms, moving it through whatever Verizon or whoever is like the delivery mechanism, it simply just didn't exist. Like the broadband just didn't exist in order for us to be able to do it at scale until very recently. So this is like, this is sort of the early innings of a lot of these technologies. Like blockchain technologies are in like warm-ups to preseason. Like we're not even remotely close to what we're going to see. And that's what's exciting.
Mm-hmm. And so I want to talk about that within the framework of information flow, because it was another really interesting point you made on the group chat conversation, and how it kind of tipped you off to where the arrival of retail trading, or at least the arrival of it in mass as it has recently. And that typically the way that you gathered information, that you discovered alpha, an information advantage while as a financial professional at a bank, was you call other smart people. The people working at investment banks, but your boss ain't letting you go on social media, ain't letting you go on Twitter, and people have to keep a very low public profile. But then you were going and seeing the comments and the chatter in Reddit, in Reddit groups, on Reddit threads, on Twitter, was actually had more valuable and more informed information that you were finding from those calls on the street. That had been the way that people transferred information and did their research for decades, right? And so this kind of foreshadowed the idea that a whole new sector of trading and financial, let's call it not professionals, but financial activity and trading activity was going to pop up outside the scope of actual banks and financial institutions.
Yeah. So the one thing, I think there's like a few benefits that institutional investors typically enjoy, whether it's like more capital or the ability to be able to hire, certain analysts that are really great at picking stocks or whatever. But the one thing that's a massive disadvantage is the lack of community. And community is kind of like this overused term. But when I mean community, I mean, if you're a hedge fund, your bread and butter is outperforming other hedge funds. Like that's like what your goal is, right? Because then come the end of the year, you can say, look, I've posted 2%, 5%, 10% better returns than the other guy. Thus, you should withdraw money from the other guy and you should deposit it with me, right? So there's a fairly finite world of like hedge fund buyers, and like there's a large amount of hedge funds that are looking for, investors in their hedge fund. So because of that and of that dynamic, there's not a lot of communication between hedge funds. Like there's some other regulatory things and reasons why or whatever, but like there's not a lot of, hey, Matt, I found this amazing idea. You should also be invested in this, right? Because if I tell you, then you do it, then our returns are the same. In the retail community, it's almost the inverse, where if somebody has a great idea, or if they realize something that shouldn't exist, like a fundamental mispricing of an asset, GameStop, for example, when it was, massively oversold from a short sale perspective. And if that is not communicated to the rest of the community, the likelihood that asset is going to actually revert to the value that it should be is almost zero, because the individual retail investor doesn't have enough money to make it so. Right. So like that guy that realizes that might have like a few $1,000s in investment. So you need the rest of the community to buy into the idea in order for it to like actually start to move. And the only way to do that is to like actually tell them about it, whether it's using voice, video, chat, whatever. So that was like it was like a light bulb moment for me, where I was like, holy shit, these conversations are happening. And by the way, the ideas are really good. I was struggling to come up with as many good trade ideas as I was finding in the forums, right? Like, and I was getting paid a lot of money to come up with those trade ideas. And a big part of it is also just, as technology moves faster, there's like a contingent of people who just thoroughly enjoy staying on the cutting edge of it, and like they're paying attention to every little thing, and so like that's their focus. Like they're reading things that most people wouldn't read in terms of white papers, and they're understanding what that impact is going to be on the larger ecosystem, and then they're continuing to extrapolate that into investment ideas. And once they do, then these like really lively discussions take place. So I wanted to build a platform around that, because I feel like if anybody that's interested in investing could have access to this information on a real-time basis, the likelihood that they would be able to profit from it is extremely high. And, very few people are like going to actually go into like the bowels of the internet and do it on a frequent basis. So there was an opportunity to commercialize and productize it.
And so if you could, we've gotten a little bit down the road in terms of what you're doing with trading TV, but if you could back up and give us the 10,000-foot view.
Yeah. So Trading TV is the world's first tradable live stream platform for traders and financial content creators. The one line pitch is it's a fintech love child of Twitch and TikTok meets Robinhood initially, moving into crypto and NFTs later on this year. So sort of a Coinbase OpenSea competitor as well. So creators come onto the platform. They can create content on everything from stocks and options to crypto, trading cards, rare sneakers, NFTs. As long as it's an asset class that can be traded or invested in, content's totally fine on our platform. Fans, followers, and audiences can then buy and sell the underlying asset directly from us. So we launched the beta app last year. We spent about 6 months in beta. Learned a lot. It was a primarily desktop oriented experience, and the first 6 months totally pivoted to a mobile first experience starting on February 14th. The reason why we went desktop, people are like, yeah, idiot, desktop or whatever versus mobile. Like, of course. Well, YouTube and Twitch are desktop oriented experiences. So I was kind of following the logic that creators would want to create on desktop, which turned out to not be the case. Like they wanted to use mobile, and fans, followers, and audiences also wanted to use mobile. Also a pivot towards more short form video content that leads the experience. So if I come to the platform for the first time, and I'm not familiar with a creator, it's a big investment for them to watch a 30-minute video or a 45-minute live stream or whatever. So there needs to be a familiarization process to introduce the user to the creator and start to build that relationship, build the rapport. And that's more easily facilitated through short form content. So we've now pivoted to, when you come to the platform, it's a very short form video experience, which then leads into the long format video if people are looking to get more in depth on things.
And that's being a founder of a tech startup, something that is digitally focused, or where you're encountering your customers digitally. I mean, it's always iteration based on market feedback, which is fascinating. I mean, that's
totally
right. You're constantly updating, particularly during this early phase. So much like that was some initial user feedback. Oddly enough, that you kind of launched or started to open up the platform more around this seismic shift in the market over the last couple months. Anything that you've learned from what's the chatter in retail right now that you're seeing on the platform?
So I actually think that I candidly believe that this is the best time to be launching the platform, because more people, there's higher levels of engagement. So if you look at total overall social volumes as it relates to assets, they tend to skyrocket during periods of extreme volatility. Like the worst thing for our platform is a like super boring market where things kind of like go up or down 10 basis points a day. And like, it's not really fun to be trading because things aren't really moving around and there's not conversations that are worth having. Like, think about this, like this is an hour-long conversation that could probably go on for 10 hours. Like there's so much shit going on in the world, right? Like there's interest rates that are getting moved for the first time in 12 years. Like, I don't know, that's a monumental thing that people should probably pay attention to. That's going to have an impact on all our lives, positively, negatively, whatever. Like there's the possibility that Russia invades Ukraine, and like then there's a bona fide war potential that's going. Like, what's that going to do to asset prices? Like, there's just so much that's going. Like, we're in the beginning of Web3 and blockchain and like game changing technologies, and all of those assets can now be traded. Like, companies are every single day issuing NFTs, and some of them are total nonsense and should be worth less than, they're not printed on paper, but the blockchain they're printed on, and some of them are going to be worth like tens of millions of dollars. So it's a great time. But I think initially the reaction when things start to get a little bit hairy is to just like pull back, right? Which is fine. But in the process of pulling back, meaning like, even though you're not trading, what most people are doing is they're looking for information. So being the hub of that information is a positive, because eventually we think that person who's consuming that information will then take action. It doesn't need to be today. It doesn't need to be tomorrow. It doesn't need to be next week. It can be a month from now, a year from now, or whatever. But we want to be the on-ramp to be able to give people the confidence to be able to take action at some point, because incredible opportunities are going to occur.
You're trying to monetize discourse around a niche, which is something that I think is very much a frothy opportunity. And because I think a lot of people assume that everyone's saying, okay, well, Facebook, the next thing is going to come around and it would be a direct replacement, just like MySpace was for Friendster and Facebook was for MySpace. That's not how it goes. Okay, you're going to kind of have your broader based, let's call it your broader based social media platforms and those kind of staple profiles, and then there's going to be just a vast array of niche platforms that serve as one particular conversation or discourse, and you're trying to do it around trading, financial markets, and retail investing.
Yeah, and I think
that be good.
Yeah, totally. And I think that there's some spaces that the verticalization of them is just like wholly unnecessary. So, you take like, there is a market for, I don't know, Civil War reenactments, but like, I don't know,
you got to assess total addressable market there.
You got to like look at what the total. So like using gaming as a parallel, like gaming is a massive market. So there can be a number of multiple, unicorn, decacorn companies that supports that ecosystem, whether it's Discord and chat, whether it's Twitch and streaming, like all the different publishers that go into it. So finance to me is this thing that was traditionally looked at as very unsexy because there wasn't a lot of disruption that was taking place in the actual space. And that has gone, from basically non-existent disruption to an entire like DeFi and Web3 sort of movement over the course of the last 18 months. And so I think there's going to be, 10, 15, 20, 30 companies that end up being multiple billion-dollar businesses that are supporting this. And if Trading TV can, play a part in that, then that's great.
Fantastic from your mouth to God's ears. So we've been talking about this more in terms of the public markets and macroeconomic policy, but let's talk a little bit more about, you are now a startup founder. You just went through the experience, and one that scares off is probably the prohibitive activity for 99% of the people who end up not starting companies. You raised money. Yeah. What were your experiences raising a pretty significant initial round over the past year? What did you learn, and what's your outlook? And has any understandings changed from when you began that process?
Yeah, it's a great question, and actually, like, I've been keeping a notebook on all of my learnings from the fundraising process, the entrepreneurial process in general, just because I feel like there's a lot written on like scaling businesses and, whatever, like sort of the growth phase of things. But there's not enough written on like, how do I get from that moment in time where I wake up with what I think is a great idea to like day one of operating a business. So I guess like a few things I would call out. One is, I strongly recommend that people find a co-founder. Like, I didn't have a co-founder. And if I could go back in time, I would have my first thing I would have done is instead of pitching investors, I would have just pitched technical. I'm a non-technical founder for everyone listening. So, I come from Wall Street, not from Silicon Valley engineering background. So I would have just gone to Silicon Valley and I would have sat in a coffee shop and I would have pitched the idea to like every engineer that I found or whatever, until someone was like, yeah, I'll found this business with you. And the reason for that is you make a lot of like technical mistakes along the way that cost you both money and time that can be avoided if you have like a great technical founder. Conversely, if I was a technical founder, I would be looking for a business-oriented person, because I've dealt with a lot of engineers who I think are fantastic engineers, but they don't do what I do and I don't do what they do. Like, they're not out in the world doing business development, raising money, so on and so forth. So the combination of both sides of the house, I think, makes for a compelling story. And as we go into what I think is going to be a tougher environment to raise money, having like a great founding team is super important. Also, I want to say that my biggest fear when I was starting TTV was that I was like going to tell, you or someone else, not that you would do it maliciously, but like that someone was going to like steal my idea. Like, you're at a cocktail party and you're like, oh, my buddy is like starting this great streaming company for traders. And then, cause like everyone's seen, a social network. And so like, Facebook was That's never going to fucking happen. Like you
Yeah,
should spend all day, you spend all day telling people about your idea. Like that should be the only thing you should do. Just tell people about your idea.
Good advice when taken becomes great advice. The thing is, most people don't take good advice, just like they don't act on good ideas. Okay. If you have a good idea, someone else has had it before. You're not going to tip. There's no light bulb that's going to be, no light bulb's going to go off when you pitch your idea to someone and then they're then going to take it and run with it. Other people may compete with you, but that either you're going to beat them or you're dead anyways.
Yeah, like, exactly.
That's it. You have to execute. You have to scale. And I mean, from the legal perspective, it's these founders asking people to sign NDAs ahead of time.
Crazy.
Just here's a quick message for anyone who just came up with a great idea, wants to pitch it to raise money, and wants people to buy to sign an NDA. Nobody valid, nobody legitimate is signing your goddamn NDA. They'll laugh at you if you try. Yeah,
it actually does. Like that's the thing is that you did nail it. They will laugh at you, and it actually makes you look like an amateur. So I would highly encourage people that think that, you know, getting an NDA is a positive to not go that route. Because if you ask VCs to do it, they would never do it because it would bar them from investing in like companies. So anyway, so yeah, getting a founder, I think getting a technical co-founder or a founder on the business side.
Tobias, what do you think, what aspects of your pitch or aspects of your business do you think were the convincing factors in getting these highly discerning professional investors to invest with you? Yeah.
So I pitched creating a technology that previously didn't exist. So like tradable live streaming is something that we invented. So like we had like a strong technological idea, or at least like taking technologies that were utilized in other formats and repurposing them for something totally new. That was one. Two, we had a massive potential addressable market. So like, it's not just thinking about, like let's say stocks or something like that. Like we were going after the entire retail investing ecosystem, which even during the course of the pitch was expanding far, far faster than like we could even update the pitch deck. So the best example is, NFTs. Like I didn't put NFTs into the first version of my pitch because they didn't exist in early 2020. And now we're at like, $20 billion in like, daily traded volume or whatever on like OpenSea. So the asset classes were just expanding far faster than we could keep up with. That was the second thing. The third thing was the focus on community and creators. So like companies today, like one of the reasons why a lot of people have asked me like, oh, Robinhood shitting the bed, is that bad for TTV? And I'm like, no, it's a positive. Like the biggest competitor is now there's a kink in their armor, right? Like they're showing their stock price is finally showing the weaknesses, which I've been alluding to for a very long time. And I think the primary reason that Robinhood's starting to fail is because they didn't focus on community. Like there was all of the engagement that was taking place associated with the transactions that were happening on platform were taking place off platform. So those conversations weren't happening on Robinhood, and like they didn't build a community. Like they didn't have something that wasn't a part of what they thought was important. I think it's at the center of what's important. And I think that no matter whether you're developing a social application or whether you're developing, something in healthcare or whatever, like you need to start with the community piece of it. Like you need to find people who are genuinely interested in whatever you're doing and build it around them. Because that's where things start to get into the flywheel.
People like to chat, man. People like to chat. Get past your hangups that some people have this defiance that everyone wants to have a voice now. And oh my God, well, sorry, the genie's not going back in the bottle. Everyone has a voice. Everyone has a voice. A lot of people want to have a voice. It's going to be some people who probably shouldn't have a voice, but you're going to have to take the good with the bad, and adding a social layer and some community around just about anything you do in the social media age and going forward. It's going to be critical to what you're building.
Yeah. And so I think that those three things were really important. How is the fundraising environment, moving from like actual, like the ideas and all the rest of that stuff into like getting in front of VCs. It's shocking, like how easy it is to get in front of a VC. if you are active on Twitter, if you're active, like the biggest mistake that people make, and I made this mistake because I was ignorant to how it actually worked, is like this whole concept of like stealth mode. You know what I mean? Like I spent 6 months, seriously though, like I spent 6 months in stealth mode. You know, I could only raise money from my friends and family. Shocker. The only people that knew that I was fucking doing anything were my friends and family. As soon as I like exited stealth, then like every VC in the world was like calling me up. Hey, let's have a meeting or whatever. And like, I had a few pre-existing relationships from my time on Wall Street, but 95% of the VCs that I've had conversations with since founding TTV are brand new, and they didn't have any idea that I was, on the face of the earth.
They want deals. They've got to chase deals. Yeah.
There's literally positions at all big VC firms that like the only thing those people do is comb through LinkedIn and Twitter and whatever and look for new companies to invest in. So like, I love that, you create your own content. I think more founders and more people that are interested in being entrepreneurs should create content, whether that's video content, whether it's tweets, like whether it's writing. I write on Medium, Substack, whatever, like create fucking content and get it out in the world. And like, if the content starts resonating, like if you're like, hey, this is my idea, blah, 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 and it starts resonating, like that's a tangible thing that you can then go and sell to a VC. Like, hey, I put this, I put this whatever tweet out and it got retweeted, 10,000 times. Like that's a much better, like that's a tangible data point, right? Like that's a much better thing to start the conversation off than like, hey, I've got an idea. Well, okay, well, great. Like
lots of people. Yeah. Lots of people have ideas. Not everybody has an audience, and an audience people. It's a good social proof point that people think that what you have to say is worthwhile. And I know this can kind of, hey, it can come off as cliched Gary V air quotes type of bullshit, but it's just, this is the reality, man. Content does have scalable benefits for sure.
Yeah. So I think that's like, get away from the fear of like someone stealing your idea, start creating content, find a co-founder. Once you start creating the content, you've got a decent story to tell there. Be active on LinkedIn and the other, sort of social platforms, which VCs traffic in. And then, from there, like when you're doing your pitches, I think like honesty is something that is becoming a higher, of more value too, is like, meaning like, I don't mean that people were being dishonest, but like more reasonable expectations about what it is that you're going to do. Like, there's always this concept of, if I pitch it too big, is it going to sound like, too grandiose or whatever? And then they're not going to buy into it. Like there's a happy medium between like the super in the weeds sort of pitch. And then like this, hey, we're going to create Amazon in 12 months. But like, I think having like a reasonable outlook, like here's where we are today. Here's like what's tangible over the course of the next year, and like laying that stuff out in like a viable manner is super important, because like most of the time you're pitching to either multi-stage or stage agnostic investors. And so they're thinking about it from like, all right, if I'm in it pre-seed, like what can I get between here and seed, like that sort of thing. And so having like that roadmap laid out is super important. And I get pitched a lot now because I've been doing my own investing on the side, and like so few of these people really understand like, okay, I'm investing in pre-seed, like what do you need to do to get to seed, and like what's that look like, because I'm trying to 10x my money from pre-seed to seed, right? Or I'm trying to like understanding like what stage you're at is also super important.
And so you locked in your round before the market started to tank, but have you been keeping abreast of the prep? Because at least at the initial upon the initial dip, someone was saying, okay, wait, the public markets are being affected more than the private markets, meaning the stock market is dipping harder than the valuation, the venture capital or the startup or early stage valuations in the private markets. Is that holding true? Are you starting to see a pullback of investment funds from early stage companies, recalibration of early stage valuations, or is that still something we're anticipating that we haven't quite seen yet?
Yeah. So in terms of the speed, obviously public markets are going to react a lot faster because they're they're traded on an exchange that allows real-time liquidity, right? So like it's gonna move faster in the public markets than it will in the private markets, because that's the liquidity dynamic that exists. In terms of private markets and the correlation to public markets, traditionally it's been fairly strong, meaning like, when public markets equities are going up, like founders love to use those as comps because it benefits us to do so, because most of the time you're comping against a company that's, whatever, like 10, 15, $20 billion in valuation. When they go down, of course, there's pushback from private market founders that like, oh, just because this market, public market equity is going down doesn't mean that our company is suffering. And it's a case by case basis, right? Like there's companies that are going to be able to raise tremendous amounts of capital at extremely high valuations. I think FTX just announced like, $35-40 billion valuation or something like that today.
Monster.
That is separate from FTX US, which just raised at an $8 billion valuation. So you'll continue to see mega deals. But over the course of this year, what I'm expecting is a more difficult environment to be able to raise funds for companies that don't have like traction. Mm-hmm. So, if you're a company that's going from 0 to 1, it's going to be harder for you to kind of get the capital there. And the valuations will probably come down, in line with public market valuations. Like, okay, what does that mean? So business is worth 20, 30, 40% less. Like, okay, within the concept of like venture capital, like VC is not about hitting like, a single, right? Like you're looking for 100x returns or whatever. So like if valuations come down 20, 30, 40%, like so be it. But I think it's a positive in a lot of ways, because if you're a business, if you're a company that's executing in an environment where less capital is getting deployed, like, you're going to be able to demand, you're going to have leverage, right?
Mm-hmm.
Like the VCs still have to deploy. They still have money that needs to be deployed. They
there's
need to be
still
more
a
selective.
ton. There's still a ton of money sitting with venture funds right now, and that's not going anywhere. Yeah, and they've got that money has to go somewhere, even if the macro environment it darkens a little bit. Like the amount of wealth that's
they love when this happens, because it means that their returns are going to be like, they know that, like, looking at my business, whatever, like, they know that at some point in time, maybe it's not going to be, 2 months from now, maybe it's 6 months from now, maybe it's a year from now, whatever, like there's going to be another bull market, right? Yeah. So like if you get a chance to buy a business that would have been, whatever, $1 billion valuation during the bull market for $250-300 million or whatever, because like things are in bear market territory, like great. That just means that they're going to make a lot more money when things go back up. So like I think good companies will continue to find funding. It'll just be at, slightly more reasonable valuations than what's been enjoyed by founders and investors over the course of the last, 2 or 3 years. Yeah.
Those venture capitalists taking a pitch from a founder, pointing to Netflix stock and saying, that's why we can't give you that $25 million cap on that safe, or God knows what. They'll pull out any stop to take some leverage there. So this has been fantastic. It will not be the last time, you and I are chatting, and obviously to your thesis about trading TV, that there's going to be an ongoing conversation, no shortage of topics to talk about in the financial markets and the economy. But for the moment, give us the current status of trading TV, and for anyone who's listening out there who is interested in participating, in being a creator, in joining, how best to do so.
Yeah. So mobile app launches February 14th. iOS and Android will be available. If you're a creator, if you're a user, it's a great time to be able to download the app, start operating. We also do have a creator's corner. So we are negotiating deals on a one-off basis with individual creators. That's at www.trading.tv. You can get in touch with us there. But yeah, I mean, like, I'm really, pleased to be a part of the podcast. It was great that we were able to have this conversation. Looking forward to the continued collaboration from you and I. And thanks for having me. Absolutely, bud. Let everyone know where they can find you on social. Yeah, so my social handles are either at ttv.hq for the company, or at Tobias_Francis for me personally. I'm on Instagram, Twitter, LinkedIn. What else am I on? I think that's it. I think we just started a TikTok. So we're on TikTok now. which has actually been fun.
The inevitable pull, the gravitational pull of TikTok,
I'm out
man.
there, man. You can find me.
You can find this man. And I'm sure you guys found this illuminating, everything you wanted to know about the financial markets. Use this information to go make $1 billion, sound cool at parties, or even go become one of the top creators on trading TV. Use it however you wish. Tobias, thank you once again for joining us. And everyone, this is the Prevailing Narrative. Thank you so much. I am Matt Bilinsky. Once again, you can listen and subscribe to the Prevailing Narrative on the iHeartRadio app, Apple Podcasts, or wherever you're listening right now. Make sure to follow me on my socials at Matt Bilinsky, MattBilinsky. The Prevailing Narrative is a Cavalry audio production in association with iHeartRadio. Produced by Brandon Morgan, executive produced by Dana Brunetti and Keegan Rosenberger. For Cavalry Audio, I'm Matt Bilinsky.